Hello friends, this is Raj Sastry from Raj Option Trading. Today is November 5th, 2021. We will talk about one of the famous meme stocks here. It's a tattooed chef, TTCF. It's in the consumer defensive sector here in the packaged goods industry. As you can see here, we got a nice looking picture here. A lady holding up a quick snack that's made by tattooed chef here. So this company has got good ethos. They want to plant, grow and manufacture, handle the product from the fields to the consumer's hands. This is where this company is trying to differentiate itself from other companies, and they also want to serve plant-based foods for the people who give a crop, in the sense people who are the achievers. They can eat these plant-based foods and take it from there. I think this company really has a good idea to really get some of these products right away from Italy. That's where they manage their plantations and grow their vegetables. So with that, let's jump in and get started here. So we'll look at company overview, major ETFs holding tattooed chef, competitive landscape, and see who are the competitors in this area. Look at few charts here and also do a little more deep dive into tattooed chef and see how this company is functioning, and then look at the financial summary and stock performance. Finally, let's go with the final verdict. Should we buy, hold or sell? So with that, let's jump in here and get started. So as you look through here, tattooed chef, they want to be true from farm to table. So that's why they want to plant, manufacture all their own products. So that's the vision this company has. We got both top brass here, both Sam and Sarah Galati. They're really very much into this authentic planting, manufacturing their own foods here. So that's the unique distinction of this company here. As you can see here, they have plantations back in Italy, and they kind of monitor this very closely and make sure the product itself is authentic. With all these millennials and most people want to eat authentic, that's where this company differentiates itself from the other crowd here. So with that, let's jump in here. As you look through here, they got multiple products going on, and as you see here, they got some nice accolades from the customer here. Best frozen food I have ever ate. And also, as you can see here, it's a amazing bowl here. And as one more comment here, I can eat this tasty hemp bowls all day long. So as you can see here, customers are really reacting to this authentic nature of tattooed chef here, and this one is just getting started. As you look through here from a company's profile perspective, it's a plant-based food company and they are into frozen foods here. They want to pick the products at the right time and then freeze it and make sure it's authentic. And they got various offers here, ready to cook bowls, zucchini spirals, and so on and so forth. And as of now, the market cap is around $1.5 billion and stock price is around $18. And as you look through the stock chart here, this is a 5-year weekly type chart here. Stock is, as you can see, up, down, up, down, up, down. Right now it's down, trying to go higher. So as you look through here, if you can think about imaginary line, it's been doing higher highs and higher lows. That's why at this time it's a good time to buy some tattooed chef. These guys are just getting started here, and they got a very good ethos. I think that's why it's a good one to buy. As you look through analyst consensus right now, we have a hold rating right now with one analyst here. That's why I think right now it's a good time to slowly start accumulating. We'll go into a little more detail so you can find out why it makes sense. As you look through here, a tattooed chef stock may benefit from changing states, changing tastes here, and they also acquire Belmont confections here. And generally, because we got some good news going on here, and also it's one of those best short squeeze type play, as you can see here. So overall, by looking at this profile, there is nothing that we need to be concerned about. And nice looking chart here, making slowly its headway with higher highs here. Right now, analysts are saying hold, don't buy more. That's what they're saying. But we have to go a little more into detail and find out about this company and see if it's worth buying and holding it for a while. So with that, as you look through here, we got the Chief Executive Officer of Tattooed Chef, Sam Galati. He's got a lot of experience, 35 years of experience. He had been with multiple companies, as you can see here, Italia, Sonora Mills, Good Karma, and so on and so forth. He's a seasoned guy. He knows how to make this machinery work, and he has good relationship with this industry here. And we got here his daughter, Sarah Galati. She had been dreaming about this food business all her life, and she want to really, put her dream to work here. That's why she's, kind of putting her dream to true here. She dreamt about tattooed chef, Italian, basically she want to she thought about this logo, the name, the design. I mean, she's really the creative brains behind the tattooed chef. And her dad here, Sam, he knows the machinery here, how to make business like tattooed chef work. So he's basically the machinery and the operations and the sales type guy here. Whereas his daughter here, she's a creative person. She kind of thinks about the product, how to innovate, what's the next thing. So that's where the pair, the father-daughter combination is really killer combination here, and they can really do well as they execute their strategy here. So with that, as you look through here, we got multiple ETFs or exchange traded funds holding tattooed chef here. We got Crop here, Global X Ag Tech here holding 4%. You got Detox and GSFP, again one more JP Morgan ETF here. As you can see here, we got a lot of these ETFs holding the stock here. And as you look to the performance of some of these here, they've been doing nicely in 1 year, as you see here, 33, 43, 35, and so on and so forth. And as you see here, they've been humming along. They've been doing well in 1 day, 5 day. That's why this whole authentic food business, healthy eating type trend, that's here to stay. Folks are, as we go forward, they are going to look at how to eat healthy, and that's where this company comes in with their ethos and growing their own products back in Italy and elsewhere in the world. I think that's where it's a compelling play here. It plays into healthy eating trend. So with that, let's jump in here and look at the competitors here, or peers as we call it. As you look through here, we got the top peers. I was sorted this by 1 year performance. As you see here, we got a Simply Good Food doing great here, 112%. We got Darling Ingredients doing again great here. And as you see here, we got the PETZ and so on and so forth. As usual, keep watching the quarterly sales growth and gross margin. Many of these companies here are nice, rule of 40 candidates. BRFS, which is Brazil-based, grocer here, company here, that's very low right now. You could buy this up outright here slowly and take it from there. It's making some moves here after dropping big time a couple days ago. As you look through here, some of these are a little high from an RSI perspective, as you can see here, 68, 65, whatnot. So you can wait a little bit for these companies to pull back here and then buy these great companies. On the other hand, BRFS right now, you could buy right now, RSI is low, nice sales growth, you could buy this $4 stock and own it. And right now we are talking about Tattooed Chef here, in the middle of the pack here. It's done around, let's say here, 14% in 1 year. And as you can see here, it's been trying to make some progress here in 1 day, 5 day, 10 day, and so on and so forth. That's where this is just getting started here with the RSI 51. It's showing some momentum as we go forward. And then we got a few more as you can scan through here. We got Nomad, SJM, so on and so forth. And we got candidates like Herbalife, which has been there forever. And we got, Bill Ackman and Carl Icahn had fight over this company. This is also, okay company. It's been doing well. It's good to buy the stock also on the downtick here. RSI is 45, good trading stock, I would say. So with that, this is a quick snapshot of the peers here. As you can see here, you could look at some of these low RSI candidates besides TTCF, and also nice growth candidates, and you could buy them. Think about BRFS here, Ingredient also works here, and you could look at Herbalife, MKC. You could look at some of those candidates and buy those. Shy away from high RSI candidates for now. As they pull back a little bit, you can buy those also. So with that, as you look through, we got a few more here. Campbell Soup here. Everybody knows Campbell, HRL, which is Hormel, and so on and so forth. Keep watching the RSI levels here. If the RSI is a little bit lower, you could buy at the time. And Beyond Meat is one of my favorite at these levels here. After getting clobbered, it's trying to make a move here. RSI is still 42. You could buy some, buy some Beyond Meat also here. Then you got FAMI. This is a penny stock, as you can see here. This is also making some news here. You could buy this on the downtick and make some good money on this one also. Understand the market cap is low on the FAMI here. So with that, let's jump in here and look at few charts. And we got BRFS, Brazilian-based company here. I love this company at these levels here. You could buy this on a down day and accumulate. I'm sure this company will do great. And as you look through BRFS here, $4.30 stock here. Nice sales growth, as you can see here. A little bit higher debt, but it's understandable for these type of companies here. And as you look through here, RSI is low. Stock has been making some move after getting clobbered a week or two ago. So I would be a buyer of this BRFS here. Low dollar stock. You could own it and keep it for a while. Then we got INGR here. INGR Ingredient. $95 stock. Nice sales growth. Nice gross margin. And as you look through here, RSI is RSI level is just 44 here. Stock is trying to make a move here. You could buy this one also at these levels. Keep watching the on the balance volume trying to go higher here. That's a good one here. And then we got Tattooed Chef, the company we're going to do a deep dive on. As you see here, it's got its ups and downs here. Right now on the balance volume is trying to have an uptick slowly after dropping for a while. And as you look through here, Tattooed Chef, nice sales growth in 1 year, and gross margin is 13%, which is understandable. Company is growing at this time, and nice uptick here in 1 day, 5 day, 10 day, and so on and so forth. That's why I think Tattooed Chef, I think we should consider this slowly buying into this little bit downtick and improving situation here and take it from there. And then you got Nomad here. Nomad, as you can look through here, it's a $27 stock. Nice gross margin, 31%. That's a great here. Sales growth is a little bit weak, as you can see here. 1 year it's done well, and stock is trying to rebound here. RSI is 46. This is also a good one to buy at these levels and take it from there. Next, we got a few more. We got Beyond Meat, one of those storage stocks here. I think Ethan, the CEO, is a great guy. Stock is trying to have a little bit upswing here after getting clobbered. As you can look through here, Beyond Meat, $104 stock here. As you look through, it's got nice sales growth and gross margin, 29%, pretty impressive here. And stock is trying to make a move here. RSI is around 46. You could still buy a Beyond Meat here and own it. Keep watching the RSI levels. It's trying to go higher here. And we've got Herbalife. Herbalife, as you can look through here, company got clobbered here. Now trying to make a way higher. I think earnings is out here. You could safely buy Herbalife here at these levels and make some good profit as this bounce back here. And we've got McKesson's here. It's one of those famous stock here. Everybody knows McKesson. It's in the it's in the aisle everywhere in the shops here. As you look through, stock has been getting clobbered a little bit. Now it's trying to make a up move here. On the balance volume is trying to improve. As you look through, nice sales growth and gross margin, not a big deal here. Company is making money, net margin positive, and stock is trying to rebound here. Low RSI 52. You could safely buy some MKC here, McCormick. It's a McCormick. It's everywhere in the grocery stores, as you know. And then got SJM. SJM is one of my favorite stocks here. It's got its ups and downs. Sometimes it drops down like a big pack of hammers after the earnings. That's when you buy this company. Right now, I think earnings is coming up. I would say you could wait a little bit for earnings, or if you want to buy a little bit here, you could buy here also and take it from there. Keep watching here. On the balance volume is rising, and it's a good one. And let's look at Tattooed Chef in a little more detail. Let's look at the deep dive and see if this company is worth our money and take it from there. As you look through, I want to do a quick snapshot of the company on how is the current numbers and how is it doing right now. So let's look at this here. As you look through, Tattooed Chef, ticker symbol TTCF, $18.25, nice market cap of $1.4 billion. And right now it's in the consumer defensive packaged food industry, US based. Analysts are recommending right now it's a buy right now, and it's it's right now 34% below its 52-week high and nice 29% above 52-week low. As you look through here, they got float is low here and high short ratio. This high short ratio can cause high float short can cause some nice short squeeze as you go forward, because folks will start covering their shorts and stock can go higher and create a short squeeze type situation. That's why it's one of those compelling play here, and many folks are trying to warm up to this company here. And as you look through here, we got nice sales, $184 million, nice gross margin as you can see here, and they also have some net margin here. From a sales growth perspective, they got nice year-over-year sales growth here, and it's off of a little bit lower number, 184, but still I would take it. Nice sales growth. And as you look through from a ratio perspective, price to sales ratio is 5.95. That's not expensive. Valuation wise, check, good to go. RSI is 49, still low RSI level. IV percentile is 30, low volatility, especially after the earnings, you get low IV percentile. And they are predicting for a nice growth this year, 962% from an earnings per share perspective, and next year earnings per share perspective growth of 87. That's what analysts are thinking. That's a good projection for the future. Then as you look through here, we got debt to equity ratio, very low debt here as you can see here. That's a good one here. They got a lot of cash as you can see here, and their RO, return on asset, equity, and investments are pretty good. It's in the positive territory. I would love to see RO, return on assets, and equity in the double digits, but I would take this positive number. They got some debt, not too much here, which is manageable. And as you look through here, they got dividend yield. This debt number, I think probably don't look at this one here. They got low debt. I think we got some copy situation here. It's a low debt candidate. Don't worry about this debt level. It's not accurate. And then you got dividend. There is no dividend right now. And let's look at few more facts here and then jump in. So from a return perspective or a performance perspective, they've been doing pretty okay. 1 day it's negative, and 5 day it's positive. 10-day performance is a little bit, it's at 0.6%. From a 1 month and 3 month perspective, little negative. That's where there is some temporary weakness here. You could capitalize on this temporary weakness and buy this stock here. It's just getting started. And from a 6 month, 1 year perspective, stock is in the positive here from a performance perspective. And as you look at the moving average here, from a 20-day and 50-day and 200-day moving average perspective, I think it's right now it's probably it's a little bit negative. I would not hang my hats on these numbers as of now. I'm still working some of these numbers here, but generally, companies doing nice at this time. I would look at initiating a small position at these levels and take it from there. And as you look through here, we got institutions buying this company, and we got institutions owning around 17% of this company here, and insiders own good chunk of the company here. With the 45% insider own, these insiders have got incentive to take this company forward, and they got vested interest in the company. With the father-daughter combination here, they can do well. So with that, let's jump in here and look at a few numbers. As you look through here, top portion, we got here annual numbers here. As you look through from an annual number perspective, company finally turned earnings per share positive in 2020. That's always good. And from an annual sales perspective, as you can see here, nice annual sales, 148 mil here. That's a good annual sales here. Shares outstanding is a little bit increasing. That's understandable. Company is a little bit young company. They need some money to fund their operations and product innovation, which is understandable. If shares outstanding is high, and also if the annual sales is high, we could justify it for these growth companies. As you look through revenue here, revenue as it went high back in 2020. Right now it's a little bit low here, but pretty steady clip at this time. Maybe a little bit down here. I'm not too much concerned here. We'll watch out as it goes. That's one of the reason company stock is a little bit weak at this time. Quarterly profit, it's increasing from 7 million to 8 million. That's a good trend here. And as you look through here from a R&D investments, companies, I think these are food companies. They don't need to worry too much about R&D. We'll see how it goes. As we go forward here, it's actually not R&D here. It's a gross profit here. Let's say gross profit. All right. From a gross profit perspective, right now company is not profitable yet. And as we go forward, this company can be profitable. So with that, let's jump in here, look at a quick snapshot of how company has been doing. Right now, share price is around $18, as you can see here. Market cap is $1.5 billion. As you look through here, market cap has been slowly increasing, 1.6, 1.5, 1.7. Right now, it's 1.54. So this is where, there's some temporary weakness here since 2020 to right now. Market cap is kind of along the same line here. It did not go drastically higher. And from a price perspective, also same story. It was $22 back in 2020. Right now it's about $18. So that's why, it's not made a significant move yet. And from a sales perspective, it was 148 million back in 2020, and right now it's 51 million. That's why even sales numbers are a little bit tepid here. Not a growth here, but company is trying to make its headway and expand itself. That's why you see some growing pain here. From an earnings per share perspective, right now it's negative. It's understandable for these companies. I would like to see this trend revert a little bit. I want this company to have a positive sales growth. Right now I'm in positive EPS trend here. Right now it's a little bit negative EPS trend. They do have some nice cash here, but the trend is a little bit negative. I would be watching this out, but right now they got nice cash position, as you can see here. And as you look through here, free cash flow and operating cash flow negative right now, and gross margin is pretty good and improving. That's a good one here. And operating margin, net margin, both are trending in the not a positive direction right now. I think this company has to make some progress on their efficiency and do it better. From an earnings per shares perspective in the latest quarter, it's a little pricey. We'll keep a watch on this and take it from there. Next, we'll look at earnings history. As you look through the earnings history here, they missed their quarter when they reported last time. Both EPS perspective as well as revenue perspective, Wall Street does not like these type of misses here. We'll keep a close watch and take it from there. That's why there's a temporary weakness. Generally, this company is either providing a both revenue and earnings beat here, or just the revenue beat, as you can see here. But last time they missed on both sides. That's why stock got clobbered a little bit. That's why it could be a good time to really buy slowly as companies are making its headways and turning around. As you look through here, we got quarterly earnings of this company announced a while ago. And as you look through here, the company missed by 64 cents. And also from an earnings perspective, revenue perspective, revenue missed by 3.3 mil. So as you look through here, they got a lot of their branded sales here. I think anytime this company does branded products here, there is a higher profit margin. And as you see here, they had 33.1 million, increase of 62% in the sales. That's a good number. And they're also expanding. As you see here, they bought this company in Mexico here, and that's really working well for them. And they're ahead of their plan to reach 75 to 80% of branded sales within 2 to 3 years. It's always good to see company making progress and ahead of the plan here. And there are two products or two SKUs or SKUs as we call it. They're in the top 10 veggie entries ranked by this velocity. That's a good sign here. This is a young company. They already have two products in the top 10 veggie entries. That's always good. And they closed their acquisition of New Mexico food distributors and Carston here. That's a good one here. And they're also guiding full year with the 10,000 stores with the 65,000 points of distribution. So they are expanding. That's one thing I like about this company. They're expanding their distribution chain here, and they're also expanding in the other companies like Sam's Club, which is a wholesale club, as you can see here. And they're also going after many other retailers and grocers and expanding their brand. Then, as you can see here, they got this explosive growth from 119,000 to 4.5 million here. Basically driven by expansion and innovation. And then we got a lot of these companies like Whole Fruit, one of my favorite, Harris Teeter, Jewel, and all these companies are expanding and adding, this Tattooed Chef brand in their stores. That will be really taking this company forward. It's just getting started here. As they expand through these national chains here, they can have more scale and they can really grow faster. And in the 2021, they're reiterating their revenue guidance here of 235 million to 242 million. That's good. Companies sticking by their guidance here. So now let's look at the performance here from a yearly, monthly, weekly type performance. As you look through here from a performance perspective, stock has been up and down to some extent. 2018 it started down 3%. 2019 nice 5.8%. 2020 was a banner year with everybody staying at home. This company's products really flew off the shelf here. It did great. Right now it's trying to expand here, trying to get some scale. With the little bit negative revenue earnings announcement, stock came down this year. I think it's good to slowly accumulate, and we could have nice years ahead as companies making their expansion plans true. And on a monthly performance perspective, as you can see here, more greens than reds as you see here. Anytime it's down like this, 10% down, nice upswing. Down 2 months, up 2 months. Down 3 months, up 2 months. Right now we're in the down 2 months type scenario here. We should see a nice comeback as we go forward. Next, we look at the weekly performance here. Here we got a little more reds than greens, but anytime it's dropped nicely here, keep watching. 10% drop, nice improvement here. And as you scan through, same situation here. So that's why this company here, as they drop here, they always come back up here. That's why I like this company here. Probably this one is it's also a monthly performance. It's a duplicate of this year, but you get the trend. And then as you look through here, daily performance here, from a daily performance, stock has been trying to improve. As you can see here, there are some drops, but after the drops, companies are trying to go higher. So that's why from a performance perspective, this is one of those companies. It's good to buy this company on pullbacks and take it from there. And as you look through here, this is one of my favorite charting and analyzing a trend type scenario here. Stock price is $18. Keep watching here. We got 2021, 2020, 2019, and so on and so forth. And as you look through here, we are in November right now. Stock kind of got clobbered in October, September, big time. Now it's recovering. As you watch through here in November, most of the times, we got positive in November, with the exception of 2020, which is a little bit different scenario with the COVID type, issues. But right now, after 2 down months, it's trying to make a move here. As you scan through here, typically September, October, especially October is a little bit down time for the company. Understandable. That's why company stock came down promptly in September, October time frame. And then July is again a little bit weaker time for this company. and sometimes in say March is also a little bit weak time. So that's why at this time with the October, September both down, companies trying to make some improvement, you could buy this company. Keep watching here. Last year December it did very well. As you look at the January here, January also tend to be a little bit higher for this company. That's why I would be a buyer of this company here at these levels and slowly accumulate. As you look through here, now let's look at some few technical things here. Look at the stock chart here, and as you look through here, a lot of higher highs. Anytime it comes down like this, always a good time to buy. A lot of these shorts are really shorting this company. That's why it kind of gives a nice short squeeze opportunity every time it comes down. This time also it's in works right now. That's why you could still buy this company and participate in a nice short squeeze type rally here. And as you look through here, we got 1 year chart. As you can see here, stock has been trying to make some uh, searching for direction, trying to go higher slowly. From a DMI perspective, it's positive right now. The blue line is crossing over red line. That's a good sign here. And as you look through here, from a volume average perspective, pretty flat. Check-in money flow is trying to see where to go here. That's why I think there is a positive bias here as you look at the DMI chart and also the direction stock is headed here. I would be a buyer here slowly and keep accumulating this. Keep watching the IV percentile, still low. RSI is trying to improve. As you can see here, there is some momentum in the stock here. That's why at these levels you could buy. From an option chain perspective, as you see, your stock is at around $18. If you look at the option chain around $18 here, we got a lot of open interest here, 1.2 thousand. Keep watching at $20. We got nice 2,200 contracts here. Even 2.5, 25, you got nice contract call contracts. Even up at 35, there are a lot of people buying. The highest volume in terms of open interest at 35. That tells you that a lot of people betting TTCF will go up. That's why they're buying these call contracts. On the put side of the house, as you scan through here, keep watching here, open interest. The volume is not that high here. They're doing some hedging here, but on the call side, there's a high volume. That's why in the options market, folks are betting the stock will go higher. As you look through here, option statistics, call options traded 4.2 thousand, put options traded 1.1 thousand. That makes the put call ratio as 0.2, more calls traded than puts. It's really call volume divided by put volume. That's 0.2, which is bullish. Anytime it's below 1, that's bullish, but if it's much below 1, it's even super bullish. As you look through VWAP perspective, stock price, this was I think probably yesterday here or day before yesterday, 18.23, VWAP was 18.46. It's telling you, hey, you know what, I want to go higher. That's why VWAP is greater than the current stock price, which is always a little bit bullish for the day. As you look through here, what do we do now? We looked at the fundamentals, we looked at the technicals, we looked at the company's background. What should we do now? Great question. So as you look through here from a revenue perspective, that the revenue increase, that's good. They're also acquiring companies and trying to expand globally. And that's a 62% revenue growth. That's a good one. And they're revolutionizing the way people think about plant-based food by thoughtfully creating the foods that feel good. I think this is a new vibe here. Folks want to eat better foods, eat healthy. This company is playing into the trend here. And we got here, they're announcing that they got 2 SKUs, which is in the top 10 veggie entries. That's always good here. That will give them a little more marketing power here. And they're also expanding, as you can look through here. They're going after Whole Food, Albertsons, and multiple other companies here. With this expansion here, over 12,000 stores and 79,000 distribution points, I think this company can really scale and reach more consumers and go from there. I also like this father-daughter combination here. They are not just CEOs to make money. They're committed to the company. They want to take the company forward. With that, I recommend buying this company on any down days and accumulate. The healthy eating trend is here to stay, and Tattooed Chef can really capitalize on this healthy eating. So with that, thank you very much. Happy investing and trading. Thank you.